Okay, so here we are on the Euro versus the USD 5-minute chart. For those of you who have never used fib ratios, it can be kind of hard to understand, but once you become a pro at them, they can be the most powerful tool in your trading bag. Pretty much every platform has them. If your platform doesn't have it, it would be the first that I've seen. Now, when you click Fibonacci wherever you're at, and you want a retracement, see how it's anchored to the top up here? The Fibonacci is anchored. I'm able to drag the bottom. When it's anchored to the top, we're looking for a short on a retracement. Just remember that. Okay, so I'm going to run it from the beginning of the move down to the end. Now, wherever that red diagonal line is, I don't care. It's just as long as I get the prices close. Okay. So let me discuss these ratios. First of all, the 382. When a market is moving down like this, it'll usually retrace to the 382 and then collapse. When a market wants to retrace more, it'll usually go to the 50 and it'll react. All these lines can be reaction lines. The 38, the 50, the 68, 61.8, the 786, the 886, up on into your extensions, okay? There isn't a way to play midlines like in pivots. These are the battle lines, right here, all these battle lines. What we want to do is harness that power. So if we take it at the 62, or the 618, whatever you want to call it, and we trade it down, that could be classified as a retracement. If we also drop in a horizontal line there, and we go out to the 1 hour chart, you can see that this is a support level. The market pivots at that level. So it can then be used as a confirmation of support. You can also use this to identify harmonic patterns. Now that'll be discussed in a later video, but for right now I just want to discuss that when you're using these, the extensions matter also. For instance, right here, if we take an extension and we draw from the end of the move to the beginning of the move, which is how you draw extensions, you will see that the market came into the 1414 and sharply fell off. You can also see, if you look left and you drop in a horizontal line there, that that was right at a support level. So as you see, this is not only dealing with an extension and a counter trend opportunity, but it's also dealing with confirmation of a support zone. Now, you need to play around with these fib ratios, and you'll find that you can draw them from there. Now, if I draw it from the beginning of the move to the end of the move, I'm looking for a retracement. Extensions do not matter. So we have these retracements here. Hit the 618, reversed a little bit. Now I could also draw the fib ratio from there. You get a little reversal there. You get a little reversal there. The fib ratios can be drawn off any of these peaks as long as the anchor is at the top. Now when the anchor is at the top here, which is the end of the move, and I'm moving it like this, of course this fib ratios are going to change. But what you want to look for is you want to look for convergence between them. So you can do something like that and then see that I drew two fib ratios, Fibonacci retracements, extensions, and they all converge right there. Now, of course, you didn't get a big bounce there, but you can definitely tell that the market fought there. These lines can all be fought by the buyers and sellers, and they're used a variety of times in technical analysis. Now, if we look right here, we can see that the market retraced to 786 and promptly sold off for around 30 ticks. Okay? So these are all the ways that Fibonacci's can be used. They're a very excellent tool, and for right now, I would recommend that you play around with them. Draw them from the tops to the bottoms to the tops, and you're going to find that anywhere the market is going to reverse with them. And I use these for harmonic patterns also. And you'll find out in the later video when I explain to you a harmonic pattern called the ABCD that the Fibonacci's are not only an extension tool but a retracement tool, and not only that, they add to the support. So a harmonic combines all those elements. And I just wanted to discuss that if you ever want to get into precise trading without an indicator, bear chart, I would recommend that you use fibs. Fibs are one of the best tools out there. Now, they're not going to work every time, but what you want to look for is a fib with support, with a trend line, with something else. You don't want to just use fibs by themselves usually, but fibs can be used by themselves and are used by traders around the world, as you can see. I mean, I just keep drawing it, and you can find a number of ratios in there, and the market usually reacts to every one of them. It's up to you to determine which one it's going to react to, but that's not too hard when you bring in your support. If you look left, and that's just the basics of trading. Okay, so I hope this has been helpful for you if you're a beginner in Fibonacci ratios. If you were a little more advanced and this was boring, I'm sorry. I'm going to get a little advanced later and show you how I use them to identify my harmonic patterns that I trade. And if you enjoyed this video, feel free to leave a comment under it. Thank you.